From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Kaylee Lines, I'm Joe Matthew.
President Trump announces a 90-day pause on reciprocal tariffs for all countries except China, which sees its rate raised to 125% after Beijing slapped retaliatory 84% levies on U.S. imports.
I did a 90-day pause for the people that didn't retaliate, because I told them if you retaliate, we're going to double it. And that's what I did with China, because they did retaliate.
The news sending stocks flying in their best day since October 2008, just hours after Trump said it's a great time to buy. We'll have analysis. Carol Schleif, BMO Private Wealth, former Treasury official Ben Harris.
And we'll have the reaction from one Republican senator who had warned of the downside risks of tariffs. Our conversation with Todd Young of Indiana is still ahead this hour.
Thanks for joining us on the Wednesday edition, the late edition of Balance of Power, as we turn now from the latest from the White House. Bloomberg's Jordan Fabian with us here at the table. Jordan, it's great to see you. What a turn of events. We talked about this a lot. Straight through the implementation of reciprocal tariffs at 12:01 a.m. Was this all part of the plan, or did Donald Trump start actually watching the markets?
You know, to hear him and his aides tell it, it was all part of the plan. But if you read between the lines of what they were saying, he was watching the markets. In fact, you know, the president kind of truth squatted his own team when he appeared before reporters today and said that he was watching the bond markets. He was seeing, quote, the stock market being yippy. And then he decided to pull back. And then he gave a little window into his timeline that he had thought about it over the last few days. But it was really this morning when the full scope of the reaction, especially in the bond market, was evident that he decided to pull back.
And just quickly, he just spoke for an extended period of time with reporters in the Oval Office. One of the things he said is that he can't imagine further increasing China tariffs, but he's already done it on multiple occasions. Jordan, so can we really rule it out?
I wouldn't rule out anything at this point. We've seen his tariff plans go from one extreme to the next, depending on the day. And I will mention, you know, maybe that gives people assurances, but 125% tariffs on China is staggeringly high, and it completely changes the bilateral trade relationships. So if he's going to ratchet it up a little more, the damage has already been done. It doesn't really make that much of a difference.
All right, Bloomberg's Jordan Fabian, thank you so much. Meanwhile, some damage in financial markets being undone today as the news from President Trump sent stocks rallying by the most since 2008. And for more, we turn to Bloomberg's Romaine Bostick in New York. Romaine, incredible the difference a few hours can make.
A difference a few hours can make. The question, though, Kaylee, is what actually created this sort of pivot by the president? We'll never really get in his head and know. But when you look at the price action in the market, particularly in the bond market, this was a bond market that was pushing back. We had a huge spike in yields earlier in the day on the long end of the curve. Think 30-year bonds. Those were up above 5% for the first time in quite some time. And that was considered a line in the sand for a lot of investors, a signal here that the bond market was fed up. I have no idea whether Trump was paying attention to the bond market. He says right now it's back to being beautiful, and maybe it is, because that reversed, and we then saw most of the activity move to the 2-year end of the curve. Jamie Dimon, of course, who runs J.P. Morgan, one of the most consequential banks in the world, he took to our competitor Fox News earlier today, Fox Business, and gave an interview where he talked about the recession risk. So you had two very prominent things in this market right now that seem to have caught the attention of someone in the White House. Trump certainly acknowledged that he actually was aware of both of those things, and that caused maybe a bit of the pivot that we saw. What ended up as being not only the best day that we've had going back to 2008, but when you talk about the reversal, guys, we're now basically in unprecedented territory. We really have not seen volatility like this on a single-day basis, unless you go all the way back to the 1980s.
Remarkable. Bloomberg's Romaine Bostick. Such a help this week, Romaine. Thank you for putting this in context as we now turn to Carol Schleif, Chief Market Strategist at BMO Private Wealth. It's great to have you with us on such an important day, Carol. Where's your confidence level? Was that the bottom?
Oh, hopefully it was the bottom. We have seen, well, first off, thanks for having me. And we have seen a lot of extreme extreme data in between the VIX, between credit spreads, a lot of stuff. And markets can't stay at those extremes for a very long period of time. And we saw sample evidence in terms of the false rumor that circulated a couple days ago and moved 5 trillion in 10 minutes or so. We saw a market primed to want any hint of good news in order to stabilize in there, because markets like this that come down short and sharp in reaction to basically new news, because this wasn't the breaking of a sector, this was an intentional policy move that shocked markets. And when we've seen examples like that before, the 1987 crash, the 1998 the Asian currency crisis, and most recently the pandemic, when they come down on things that aren't broken in the economy, they tend to come down short, sharp, and then reverse pretty quickly as well. So markets were definitely primed to want to do that, but we'll see how it settles out going forward.
Well, especially considering, Carol, that it's not clear what actually will happen over the course of the next 90 days or what happens beyond that time window. And already, even prior to today's announcement, we saw companies and corporations having to make decisions around just the expectation that tariffs could be implemented. Walmart, for example, suggesting they were prepared to eat potentially the margin hit in order to stay competitive. Delta pulling guidance. Amazon, according to our reporting, canceling orders of inventories on goods from China. How much could this have already altered corporate behavior and therefore what we're going to see in corporate earnings, even with this pause now in place?
I think that's a really important point, because one of the things we've been pointing out to our investors is that there are some important hallmarks like that in terms of the way businesses were already trying to structure themselves. But the biggest issue that we've heard about repeatedly was that lack of clarity. Now, I'm not sure a 90-day pause gets them any more clarity, but there have been repeated signals that, the initial levels put out there are as bad as it gets unless you retaliate. So hopefully they back off from then. As investors, we'll have a great opportunity in the next few weeks to month and a half, as companies are reporting earnings, to really probe during those calls and find out, what have you done? What are you doing? How are you structuring? Doesn't mean we're out of the woods yet for those companies. And you saw it too with Delta this morning pulling guidance. It's very reminiscent to what happened going into the pandemic, when most companies pulled guidance, furloughed instead of laid off workers, and really prepped for what life would look like on the backside of the pandemic whenever that came. And you've got similar going on here, which is really important, because the resiliency that our companies in the US have shown time and time again with what they've been dealing with in the last decade, from pandemic to port strikes to messed up supply chains and just a whole host of things, and they keep coming out on top. And so we'll get lots of good messages, I think, or at least hints in terms of what companies are able to do, because at least now the surgery's over and we're in the recovery phase.
We heard from the president a couple of times today, Carol, had this response regarding volatility in the bond market. Listen.
I was watching the bond market. The bond market is very tricky. I was watching it, but if you look at it now, it's beautiful. The bond market right now is beautiful. But yeah, I saw last night where people were getting a little queasy. I think everything had, well, the big move wasn't what I did today. The big move was what I did on Liberation Day.
He saw 4.5%. Speaking of queasy, but Carol, in light of today's successful auction, the movement in interest rates, how long will this market stay beautiful?
I think the bond market is something that we're all going to have to monitor very carefully for a variety of reasons. One of them is the fact that we are running huge deficits and debt in the United States. And a second one is, as a trading partner, as an investment choice, that we've thrown that into question in terms of reliability there. And is the U.S. truly a risk-free asset or worthwhile? And so you've got a lot of evaluation and reevaluation going on globally, into the extent that the Japanese or the Chinese in particular would start pulling back from our fixed income markets. It bears watching, but you might have some demand coming as investors per se have stayed very short duration for a very long period of time. And if they see those yields pop back up to 4.5%, 5%, especially if we can keep a lid on inflation because the tariffs don't end up being as bad as anticipated originally, you might see some interesting investment opportunities there.
All right, Carol Schleif, Chief Market Strategist at BMO Private Wealth, thank you so much for joining us on such an incredible day. And coming up, reaction to President Trump's tariff reversal from a Republican senator who had warned of the policy's downside risks. Our conversation with Todd Young of Indiana is next on Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg TV and radio. Alongside Joe Matthew, I'm Kaylee Lyons. Republican Senator Todd Young of Indiana warned just days ago of the downside risk of President Trump's reciprocal tariff policies. And earlier today, after Trump's announcement of a 90-day pause in those levies on all countries with the exception of China, we spoke with the senator about that reversal and whether he's confident there won't be more uncertainty around trade policy in the interim.
You know, I am encouraged that the president is bringing some clarity to his future policy here. This is a start, and he's been able to achieve a lot of leverage for the United States to renegotiate a number of these trade agreements, which is what so many of my constituents want. But I think we have an opportunity to pocket some wins, take concessions that are offered, and then provide more details in coming days and weeks about exactly what a reset will look like, what our final negotiating objectives are, and that will assist markets and businesses as they think about deploying capital and making important investments that help drive our economic growth.
Well, would you pull your support for the bipartisan Grassley-Cantwell bill that limits any president's authority to implement new tariffs? Even if all these tariffs go away, Senator, does that need to happen to codify Congress's authority on this matter?
Listen, I think people are asking for their members of Congress, for their elected officials generally to step up and show leadership right now. And that doesn't mean delegating all sorts of authority to other branches of government. So I do think it's important that Congress uses its voice and Congress does its work with respect to any revenue policies. That would be tax and trade policy. So that's what Senator Grassley has proposed. I think it's eminently reasonable. At the same time, my constituents want to make sure that I have the president's back when it comes to enforcing trade laws. That's where the executive branch comes in. And I'm trying to empower the president with more tools to enforce authorities. I have a piece of legislation, Leveling the Playing Field Act 2.0, that would do just that. So that's how I look at this, and I look forward to working with the president to achieve his objectives.
Well, it seems the president is quite capable of doing a lot of things on his own, including creating massive gyrations in financial markets. Senator, we just experienced the single best day for U.S. stocks going back to October 2008 after the president earlier today suggested on social media it's, quote, a good time to buy. Your colleague in the Senate, Democratic Senator Adam Schiff, has pointed to this and says it provides dangerous opportunities for insider trading. Are you worried about market manipulation here?
Well, listen, what I'm worried about is not seizing an opportunity that now exists because the president has created this opportunity to lower tariff and non-tariff barriers and other forms of undermining our export abilities and our trade laws. And so the president's got us to this position. I think what we need now is continued clarity brought to our negotiating objectives. And assuming the president and the administration do that, I'm with them 100% to make sure that we reset trade relations and then move on to other important priorities facing this country.
To Kaylee's point, though, there is a question about whether there was any insider trading that happened inside the administration while decisions like these were being made and the markets were taking us on a roller coaster ride. Would you like to have an inventory of trades inside the White House?
Listen, I think here in the legislative branch, we certainly we have pretty strict disclosure. I actually would advocate for a lot stricter disclosure for any members of our government. elected or any other leadership capacity to prevent insider trading. So to the extent there is evidence of that, I would advocate chasing that down and holding accountable those who've violated our laws. But that's where I stand on that issue.
We appreciate that, Senator. I'd like to ask you about the other portion of the news we got from the president today, because in tandem with the announcement of the 90-day delay for some countries was the news that he is raising the tariff on Chinese imports to 124% after their retaliatory tariffs of 84% on U.S. goods. Economists have suggested that effectively chokes off this entire trading relationship between the two largest economies. What impact will that alone, just the China tariffs, have at home in Indiana?
Well, listen, I represent the most manufacturing-intensive state in the country. I represent a major ag-producing and therefore a major exporting state, and so we are trade dependent in our state. We want vigorous trade. We want to open up foreign markets, and I support the administration as they pursue some of those efforts. There's no question that we're deeply integrated with China. But we're also on the receiving end of a lot of abusive behavior, and the president is trying to correct that. Will there be some near-term implications? There will, and my job is to communicate those to the administration. I've already been doing that, most of it quietly, admittedly, to work constructively with them to mitigate some of these impacts, and I'm definitely going to do that moving forward.
Well, we can put a number on this, Senator. $5.2 billion, according to the U.S.-China Business Council. Indiana exporting $5.2 billion to China in 2022. I think that was the last year on record. Can you replace that kind of a customer?
Well, listen, what we can't replace are all these lost opportunities, from intellectual property theft to preventing our products from going into the Chinese market itself, to the dumping of certain commodities into the United States and other countries to put our workers and our businesses out of business. This is just unsustainable. This cannot continue. President Trump is really the first president. He ought to be credited for elevating and escalating this issue. What I'm advocating for at this time, however, is more clarity on a going forward basis, just as he's brought some clarity today about our tariff negotiation strategy, because my hope would be we can pocket some of these wins. We can de-risk out of China over a period of time, working with our trading partners and allies, and then set ourselves up for more sustainable and growth, and frankly, more fair treatment for our workers and businesses going forward. I acknowledge that this will lead to some near-term disruption. We've seen a lot of that disruption. I think that can be mitigated substantially if the administration, or as the administration, provides more particulars about its negotiating objectives and shows us that there is an end game that everyone is hoping for.
You, Senator, have warned specifically about the threat of competition in biotechnology coming from China as chair of the National Security Commission on Emerging Biotechnology. Does a trade war with China help or hurt efforts for the U.S. to be more competitive in that sector? If there's a lesser economic relationship between the U.S. and China, does that actually remove any incentive China might have to hold back on trying to beat us in that arena?
Well, listen, unfortunately, as our National Security Commission on Emerging Biotech report lays out in great detail, we're already behind China in certain areas of biotech. I don't think most Americans realize that. We are a clear leader in so much of the biopharmaceutical sector, but in bioag and bioindustrial in particular, the Chinese have had a plan for 20 years. That plan involves a lot of intellectual property theft, but also a lot of brute force economics, where they're throwing bodies and money at solving hard problems. And they've thrown enough of those things at them that they really have caught up with us. Now, what are the implications of this for bioindustrial? Well, as we think about bioindustrial applications, many of them are used in our defense systems. So, and we also want to make sure that our food supply is protected and we're not dependent dependent on certain foodstuffs that come from China. So we need to be leading in these fields if our war fighters are going to be prepared and our people are going to be kept safe. And so we lay out a number of recommendations for that. Among those are in the trade area. We think it's not just China, but so many other countries that have been undermining our leading edge biotech companies by keeping, particularly in the ag sector, many of our biotech products out of their domestic markets. We need to correct that, and we're already in touch with the U.S. trade representative to see if we can use this leverage that President Trump has created for us to try and remedy some of these defects and make sure that this golden age of biology is led by the United States.
We thank Senator Todd Young, Republican from Indiana, for joining us on Balance of Power. Coming up, conservatives in the House threatening to block a budget blueprint to kickstart tax cut negotiations. We may get a vote tonight. We'll talk to Bloomberg's Megan Scully about it next on Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg TV and radio. Alongside Kaylee Lyons, I'm Joe Matthew in Washington. Thanks for joining us. Some House Republicans are pushing back on leadership's plan, Speaker Johnson's plan, to quickly move the Senate-cleared budget blueprint through their chamber. This would unlock the reconciliation process, and we're waiting now on a vote on the budget resolution, which appears to be sliding into the night here a bit. For the latest, we turn now to Bloomberg's Megan Scully, who leads our congressional coverage here in Washington. Where are we in sports here? These are procedural votes. Do we get to the floor tonight?
That's what they're saying. Around 7 o'clock tonight, we expect there to be a vote. But the heavy emphasis on around. So we will see right now House holdouts, ultra-conservatives who are not happy that the Senate version of the bill does not cut the $2 trillion they want, are meeting with the Senate Majority Leader, John Thune, which is a pretty extraordinary moment. They don't typically meet across the chambers to talk to one another. So we'll see if Thune can convince them.
Well, how can Thune do it if President Trump couldn't yesterday? There was a meeting at the White House over this.
There was a meeting at the White House, and several walked out of the meeting saying their minds had not been changed. But as you've been reporting throughout the show, things have changed dramatically, particularly for the economy, just and for markets, just in the last several hours. So it will be interesting to see whether that affects where these House Republicans tend to be. I think Trump probably has some more juice with them right now that the markets are soaring. So we will see.
All right. Indeed, we will. Bloomberg's Megan Scully, thank you so much. We'll be on watch for that vote later tonight. But in the meantime, we turn back to what Megan was just alluding to, President Trump's decision to delay reciprocal tariffs on all countries but China. We'll discuss the potential economic ramifications with Ben Harris next on Bloomberg TV and radio. This is Balance of Power on Bloomberg TV and radio. I'm Kaylee Lyons alongside Joe Matthew as we're showing you on Bloomberg TV as well on YouTube a live shot of the Commerce Secretary Howard Lutnick speaking with reporters just outside the West Wing at the White House on President Trump's U-turn on tariffs today. The Commerce Secretary suggesting that markets did not lead Trump to turn and to pause on tariffs. Remember, this is a 90-day pause on everyone except China. On China, Secretary Lutnick is saying that Trump does expect to have conversations with Xi and says that President Trump will be the lead negotiator on tariffs, that many great countries are willing to make fair deals. But it is on that China point specifically that we want to focus on now, because, of course, President Trump said today that while other countries are getting a reprieve here, the tariff rate on China will go up to 125%. That is in response to Beijing retaliating against the administration's duties, reciprocal tariffs with 84% levies on U.S. imports that are set to take effect tomorrow. And while Trump says China eventually wants to make a deal, Jennifer Welch, the chief geoeconomics analyst at Bloomberg Economics, isn't so sure about that. She writes in a new piece out on the Bloomberg terminal today, quote, "After years of sitting across the table from Beijing at official negotiations, I've learned this. They guard their pride, drive a hard bargain, and play the long game." And Jenny is joining us now with more. So you have actually been in this scenario that many officials in the administration now are going to find themselves in, assuming the call comes in from Beijing. Jenny, do you actually believe that call's coming in the first place?
I think at this stage, no. President Xi Jinping isn't going to be picking up the phone, and we've seen that over the last few months, until he has a clear sense of what he's going to get out of a conversation with Trump. He doesn't want to put himself in the position of being potentially embarrassed. He doesn't want to put himself in the position of being surprised. So right now, I think the two sides are pretty far off on talking, let alone even beginning to discuss a deal.
Yet a massive relief rally today on Wall Street. Do we need to remind ourselves that we have effectively a major trade war now between the world's two largest economies? On any other day in a vacuum, wouldn't that tank the market?
I suppose it's better news compared to multiple simultaneous trade wars with pretty much all of our major trading partners, and I think that's where the market relief is coming in. But yes, this is significant uptick from even the first trade war under Trump's first term, right? We're back in that kind of escalation spiral and tit for tat, but obviously the tariff rates are much higher and the stakes are much larger.
Well, so with the tariff rates are what they are now, even for a short period of time, Jenny, what is this automatically going to do to the flow of trade between the U.S. and China? How precipitously could we see import volumes dropping?
Well, it's interesting you asked that, and this gets back to how dramatic this shift is. Last year, when on the campaign trail, Trump talked about 60% tariffs on Chinese goods, and we modeled that. That leads U.S.-China trade to take a nosedive. Now we're at 125%.
Literally more than double.
Yeah, exactly. So I think we're going to see trade fall off pretty precipitously. There will be some things that probably still will get traded because they're so critical that even at a higher price, they can only come out of China, for example. And there are other goods that, for example, are going to be subject to the new de minimis tariffs, and so still a lower price than the overall tariffs. But yes, I think this is going to have a pretty dramatic impact on bilateral trade.
Great to have you with us, Jenny. Of Bloomberg Economics, Jenny Welch, live from Washington, as we now gauge the economic impact of the pause here on reciprocal tariffs with Ben Harris joining us live in Washington, Vice President, Director of Economic Studies at the Brookings Institution, former Assistant Secretary of the Treasury for Economic Policy. It's great to have you back with us. So is this officially the decoupling?
The decoupling of trade with China?
Yeah. We heard that term a few times in the Biden administration.
Look, I think that the past is sometimes the best guide to what's going to happen in the future. And if you go back and look at the first Trump administration, despite all the rhetoric on tariffs and trade deals with other countries, it was really just a one-way trade deal with China. And so my expectation had been that's what we'd see in the second Trump administration, because the same forces that led the Trump administration to really not put up tariffs on other non-China trading partners are still there today. So, do I expect this to continue? Sure. I don't think Trump can back away from everything. But I think you saw today that markets don't like these trade barriers. Yeah. And this was just a great day for anyone with a 401k or any interest in the equity markets.
Yeah, with the best day since 2008. On the China point, though, and what Jenny was just speaking to, this idea that there may be still trade in some things because we simply cannot replace China as the source of those things. How big is that pot? How easily replaceable in terms of supply are the vast majority of goods that we get from China?
Well, a lot of the Chinese goods are traded through other countries, Vietnam, other Southeast Asian countries, right? So the fact that we entered into today with the 50% tariff on Vietnam and today we don't have that, I think means there'll still be a way to facilitate some of that trade. So sometimes the headline number isn't quite as big as it seems. The same is true for the tariffs on Canada and Mexico. It seems like a really big headline number, but there was an exemption for the USMCA. Right. And so, I think this may be a case where that 125 doesn't apply across the board quite as much as it may seem.
Ted Cruz was talking about the angel on one shoulder and demon on the other for Donald Trump. Did Peter Navarro lose today? We've heard so much about non-tariff barriers, tariff evasion, Vietnam. Now it's not going to be addressed, apparently, at least for the next 90 days.
Yeah, and probably longer. Look, all the reasons that they pivoted are going to be there in 3 months. Yeah. And today was a great day for markets. I think the real winner out of all this was the bond market and the power of the bond market. And one thing that I've said kind of from the get-go was that, look, Trump doesn't really pay attention to the courts like you would hope maybe a president did. And so the referee now are financial markets. And the bond market said we are uncomfortable with the posture you're taking. Foreign entities said, look, we don't necessarily want to loan to the United States. And there's some evidence that suggests that China gave some guidance to its state banks to say, stop buying U.S. bonds. But the real sort of winner in all of this was the power of the bond market. And Trump just can't continue like this if it wants to continue having foreign investors loan to the United States.
Well, we began today, it's worth pointing out, with the former U.S. Treasury Secretary Larry Summers saying on social media, looking at the bond market, that we were on the precipice of another financial problem here. Jamie Dimon was talking about the prospects of a recession. Has all of that really changed just because of that 90-day pause? Are we pulled back from the brink to that extent, or were we never actually on the brink of brinks to begin with?
I mean, we're living on the brink now. I think that what happened is that we sort of solved the problem in equities, and we're still down 5% relative to Liberation Day. But what remains is threats to our credibility. And that took us decades to build up, and I think that's where we're really on the brink, where you've got a CEA chair who says, look, maybe we should go ahead and withhold interest payments to foreign creditors. And, who knows who will have the presidency here? And so I think that we've kind of solved the equities problem for the short term. We haven't solved the bond market problem, and it would take some real statements coming out of the president and the White House to change that.
You said something important, that in 90 days, we'll still have the same factors in place that this White House was trying to address now with regard to tariff evasion or any number of factors. Does that mean you do not expect a flurry of tailored trade deals, as the president says, to be announced?
No, I mean, look, I know enough about politics to know that recessions are bad for sitting presidents. Goldman Sachs, over the course of an hour today, changed their call, as you guys have reported, from a 65% probability of recession back down to 45% probability of recession. They went from 45 to 65 back to 45 over the course of 75 minutes. Recessions are bad for sitting U.S. presidents. Uncertainty and volatility are bad for sitting U.S. presidents. And unwillingness to invest in the United States are bad for sitting U.S. presidents. So I think that Trump has kind of understood how far he could push all this, and we have a new set of parameters.
So there's no 90-day review. This is just over, in your view. He's turning away from this.
Yeah, and look, I still think that there's going to be pressure on China, just like there was in the first term. And I think it's easier to have a trade war with one partner than with the whole world. Yeah. And I think we saw sort of the limits to how much the world is willing to accept.
Well, of course, he argues that he wants to see more of what happens around the world happening in the U.S. in terms of manufacturing. If we abandon these higher levies, which he said we're going to bring that about, a manufacturing renaissance, is that just not going to materialize? Or the 10% base levels that are still in place, even if the reciprocal rates that were higher aren't going into effect for a while? Can he still achieve that same objective with this kind of policy shift?
I mean, there's a bunch of questions here. One, do we want to make T-shirts and cheap toys in the United States? Look, I have 3 daughters. I don't want them working in a factory. I would love for them to go work in services or something else. But if the idea is to really just shift all manufacturing back to the United States, that means we'll be a poorer country overall. But if the idea is, look, we want to shift certain supply chains back, which was a priority of the Biden administration as well, this is a bipartisan idea, then there are other ways to do it than this really blunt instrument of across-the-board tariffs. You can have subsidies, you can have export controls. There's a lot of other more nuanced tools you can use. And to the Trump administration's credit, it largely did that in the first Trump administration. So my sense is that you'll probably see a retreat back to the prior strategies rather than this really blunt instrument. If the economy continues to look like it's going to weaken, right, so that really puts a limit on what you can do in terms of tariffs. And importantly, too, on tariffs and inflation, you've seen from surveys that Americans do attribute price increases to tariffs. So there's also a political risk for the White House that if you do see 3.5% inflation, you know exactly who's going to get blamed.
Even if this ended today, what would be the residual effect, the lagging effect of all the front running that we saw from both consumers and businesses ahead of this?
So I think this is a very rocky time for investment in the United States. When I speak with business leaders, I hear that there's a virtual stagnation. I mean, this is what you do in the face of outstanding uncertainty. You just kind of stand pat. And so M&A activity is down, IPO activity is down. There's a real concern around business investment being depressed. So while the U.S. consumer is still in pretty good shape, I think businesses are taking a hard look at, do we want to continue to invest? And certainly foreign investment in the United States will likely slow as well. So I think that's where the real risk is in terms of investment, and less so on consumption.
All right, Ben Harris, great to have you back. Vice President and Director of Economic Studies at the Brookings Institution, formerly of the Treasury Department. Appreciate it, as always. And coming up, we'll look at how lawmakers are evaluating Trump's reciprocal tariff pause for certain countries with our political panel. That's next on Balance of Power on Bloomberg TV and radio.
If it's not market manipulation, what is it? Who's benefiting? What billionaire just got richer? Who's in charge? Because it sure doesn't look like it's the trade representative. You just got the rug pulled out from under you.
Democratic Congressman Stephen Horsford of Nevada questioning the U.S. Trade Representative Jamieson Greer during his House testimony today, happening right as President Trump said he was implementing a 90-day pause on reciprocal tariffs for all countries except China, sending stocks flying higher in their best day since 2008 in the process. Joining us now for more is this evening's political panel here on Bloomberg TV and radio. Jim Kessler, Executive Vice President for Policy at Third Way and Democratic Strategist, alongside Republican strategist Lonnie Chen, Fellow in American Public Policy Studies at the Hoover Institution. Great to have you both. Lonnie, when you look at how the markets reacted today, keeping in mind that President Trump announced this pause after earlier suggesting it's, quote, a good time to buy, how much did markets and potential manipulation have to do with it?
Well, this would be something ordinarily we would expect Congress to explore, these kinds of questions. Obviously, Congress has been more muted, let's say, in its reaction to a lot of things we've seen from the administration. I do think that the feedback mechanism from Congress is still there. I do think to some extent the administration and the president's actions with respect to tariffs were responsive to what he was hearing from Republican members of Congress, not just on the economic feedback, but the political feedback as well. And so we'll see going forward if Congress decides to assume a more assertive role when it comes to whether it's investigations into the issues you note or tariff and trade policy going forward.
This is a bipartisan issue on Capitol Hill, right? We've heard more about Nancy Pelosi's husband's trades than we have Donald Trump's recently. But Adam Schiff takes to Twitter. Who in the administration knew about Trump's latest tariff flip-flop ahead of time? Did anyone buy or sell stocks and profit at the public's expense? Is it possible for him to get an answer to those questions?
Probably not. We know the USTR didn't know that at the hearing. Look, I think there's something bigger than possible scandal. I mean, we just watched the President of the United States wave the white flag. Like, he just surrendered. I feel we witnessed a Jimmy Carter moment where the presidency has diminished before our very eyes, and the entire world, minus China, but the entire world stood up to him, and he backed down. And this is a bad moment for President Trump and for Republicans. It is a bad moment for them.
Well, and when we consider the others in the administration, I note Elon Musk, while not formally in the administration, an advisor to the president, surely had a $36 billion increase in his net worth today with the rally that we saw in Tesla in tandem with everyone else. And we know, Lonnie, that he was on a different side of this tariff story than others like Peter Navarro, who he just yesterday called a moron. Is this win for Elon Musk and maybe Secretary of the Treasury Scott Bessent and a loss for Navarro and others who are firmly on the side of these policies?
Well, it does reflect something that I think has been talked about, which is that the president is getting advice from a variety of different sources, and people have very different points of view with respect to the efficacy of tariffs, the way that tariffs should be implemented, how targeted they ought to be versus broad-based. And there are, I think, legitimate debates and disagreements within the administration over these questions. I do think today's pause or today's policy action reflects the reality of where markets have been, the feedback, again, he's getting from friendly members of Congress as well as from interlocutors around the world. So, I think that this is one of those things where every administration, to some degree, you get conflicting advice from advisors. But I think in this administration, the stakes and the discussions are so much greater around the issues that we're talking about because of the fundamental impact we see not just on the U.S. economy, but on economies around the world.
So you're on the same side as Elon Musk this time, Jim Kessler. I don't know how that feels for you, but what should be the future of this legislation? Take, for instance, the Cantwell-Grassley bill. We asked Todd Young about this earlier. He had 7 Republicans on that bill to reassert congressional authority over tariffs, even if they all go away right now. How important is that? Can it pass?
It's very important. I don't know if it can pass. There's a greater chance it can pass today than yesterday. That is for sure. I mean, it's what I said before. You are watching the presidency, Donald Trump's presidency, diminish before your very eyes, both abroad and at home. He capitulated because of pressure from the bond markets, yes, pressure from Republican legislators, pressure from local business and foreign leaders. Like, this is a defeat.
Well, the White House says the media is misunderstanding this, and they always misunderstood that this was all just the art of the deal, suggesting today that this was the strategy from the get-go. You don't buy it, Jim?
Well, you got to say something, right? I mean, you've got to say something to clean up the mess. And I've been in situations myself where you've got to make up something quick, okay? But to quote the band Heart, they're going to burn to the wick on this one, okay? Wow. Because they blew it.
Wow. Lonnie, what's your take on that? And if what Jim is saying is correct, is there a boy who cried wolf aspect to this where the markets might not react next time Donald Trump threatens a new tariff?
Well, I mean, one would hope that at some level the reaction would be more muted. Obviously, there's a lot of factors that go into the market reaction. I guess I would say that one of the challenges for the administration from the outset here has been there have been a lot of different messages on tariffs, right? Some of this is about the policy shifts in reshoring, in trying to make supply chains more secure by shifting them away from China. I think the administration is still very much committed on that front. And then, of course, there was this line of rationale around negotiation. And I think if you talk to a lot of people around Washington and in policy circles, they actually argued that that was maybe the strongest one the administration had to go on. So I suppose if that was going to be the end game, providing a little bit more of that signaling earlier might have avoided some of the arguments we're hearing from the president's detractors today. But to call it a defeat for the president and the defeat for the United States, I think is a little bit premature. Let's see how some of these situations negotiate out. But fundamentally, the idea that tariffs can have multiple uses and multiple applications, when you're talking about it in the political context, I think it's really important to have a pat argument and to stick with it. And I don't know that we saw that in this situation.
Well, in the political context, I'm sure there's plenty of Republicans on Capitol Hill who are breathing a massive sigh of relief today, as we heard even the likes of Senator Ted Cruz warning about the potential implications for the 2026 midterms if these policies stick and cause a recession. Is today, while it might be good news for people who are long the equity market, actually kind of a bad day for Democrats in that very same vein?
I don't think it's a bad day for Democrats. I do think there are some Republicans, like Senator Tom Tillis of North Carolina, who is he's vulnerable.
Running to choke people yesterday.
Right, he was willing to choke people. Now he doesn't have anybody to choke. But there is a price for surrender, okay? And Donald Trump is going to pay that price. And he is weaker now in Congress and in Washington. He wins because he's a bully. And I'm not saying that in a negative way. Sometimes being a bully is effective. He just got bullied and lost. That's what we just saw.
Well, as Lonnie suggests, though, what happens if he turns up with 5 or 6 trade deals in the next couple of weeks? Some low-hanging fruit here. He's talking to Japan and the UK first. Would that not change the perception you're describing here?
I expect he is going to get some trade deals. There is some low-hanging fruit out there.
Yeah.
And, that might ease the sting a little bit here. But he's not going to get major trade deals that are going to change the trade balance that we have right now. No way.
And Lonnie, just quickly, we are expecting, or at least we think within the next, say, hour and a half, there could be a vote on the House floor for the budget blueprint that would advance Trump's legislative agenda, really get the ball rolling on the debate around tax cuts. Does that vote get easier now that the president has made this move on providing some tariff relief?
Yeah, I think so, because it does then turn the focus to other dynamics that will impact the economy going forward, whether, for example, questions around raising the debt ceiling, or, as you note, the really important and larger debate around extension of the Tax Cuts and Jobs Act. So I do think it's going to get easier. And I do think that as we move forward, this is going to be the debate to watch, the debate over tax policy and how the administration, Republicans in Congress, handle what will be a very consequential piece of legislation for tens of millions of Americans.
Guess we'll have to wait to see if there's any revenue from tariffs to help pay for those tax cuts. Lonnie Chen, Jim Kessler, great conversation. Many thanks to our panel this evening on Balance of Power. Coming up, March CPI set to be released tomorrow. We'll take a look ahead, as always, what to expect from the data next on Balance of Power on Bloomberg TV and radio. It's Balance of Power on Bloomberg TV and radio. Thanks for being with us alongside Kaylee Lines. I'm Joe Matthew. As we look ahead to 6 p.m. in about 5 minutes, we get our first look at futures here after the biggest rally since 2008. Kaylee, ahead of CPI tomorrow. You wonder if that even makes a dent.
Yeah, how much will that release at 8:30 a.m. Eastern time, where we're expecting to see just a 0.1% increase month on month in CPI on the headline figure? How much does it matter when President Trump just announced a 90-day pause in tariffs, which everyone was concerned about not just having an inflationary effect, but potentially a growth impact as well? A lot changed from where we were this morning to where we are this evening.
So I think what we went through during the early edition of Balance of Power, that's when that whole story broke. The markets turned around, and to land on this conversation tonight is pretty remarkable. I think it's safe to say we'll all be watching Truth Social in the duration between now and tomorrow's program.
Like a hawk. And in the meantime, while you're scrolling Truth Social, checking out other things, check out the Washington Edition newsletter as well. You can find it on the terminal and online.
Thanks for joining us on Balance of Power. This is Bloomberg TV and Radio. See you back here tomorrow.